Hey, good morning, everyone.
Good morning, Johnny. Johnny, did you hear Toronto is adding speeding machines for anything going over 50 kilometers plus, and they're issuing tickets. So
Yeah.
now, yeah, that sucks. My radar scanner is useless.
No, it's fine, TJ. It's not like you speed through speed zones or like school zones or community safety zones. The cameras are only gonna be getting put in places like community safety zones and school zones, and there's only gonna be like 12 in Scarborough, and I think you're fine. It's not like you're gonna be going 100 in a school zone, right?
Yeah, but like even on VP down there, because there's two schools there, it's like a 40 zone. I seen people getting ticketed to, like a couple days. Actually, it's like a week back. Sucks. This is horrible, guys. We pay taxes. Dobby, love the watch list, buddy. I'm gonna post that on Stock Twits.
Thank you.
Hey guys, I'll be back. Just market open. Just be right back.
I'm not really liking the volume on JBL, so I'm gonna be focused on BA. Everyone's gonna be looking at that. Analysts are just beating it down, and it's good because I want to buy BA again, and I think this might be the opportunity for us to short it first, and then you know, and then go long. I'm probably gonna swing this short, so I'm gonna be using Calmex for this one. So gotta wait till the market opens, but I wanted that 234, sorry, 324. There we go. That's the number that I wanted for a short entry. So let's see if I can get it again. So I'm just gonna quickly post the earnings results for JBL too, just so you guys can see. You know what? Looking at it, the earnings is not bad at all. These are some solid numbers. Their best quarter ever. Looks really good. What else do we have earnings on today? Whoa, whoa, whoa. One thing though. JBL did really good, but the CEO makes $11 million. Guys, there are companies that make like, let's say 10, no more, say $16 billion that are supposed to make that kind of compensation. Must be nice.
TJ, I sent you the earnings. Sorry, it's small. It's just
It's all good. I can zoom into it. Oh, we got FedEx reporting soon? Tonight. Alright. I don't expect FedEx to do good. Didn't they cancel their agreement with Amazon? Or was that UPS? I always get those two confused.
Yeah, actually, it's more than that. Amazon canceled it with FedEx. Now Amazon and FedEx are having like a little bit of a war together. I think Amazon prevented the ability for any sellers to use FedEx just the other day, so they're going at it.
Yeah, well, FedEx started it. Why would they take Amazon off? Who does that? You can't just go into war with Amazon. That is ridiculous. Know your place in the world, guys.
Well, they learned that lesson now, I think.
And that's the thing about Amazon. It's a disruptor. It can do whatever the hell it wants. They have what, like 160 million Prime members? That's an army, guys. I don't even think the US Army has that many employees.
Did you say 160 million?
I think so, right?
It sounds really high, but yeah, it could totally be right.
All right, let's find out. So as of June 19th, just in America, there are 105. But this is like old. Like this isn't even on their website. This is like
I mean,
I
that's
should
pretty crazy. When you think about it, you know, there's like what, 340, 350 million Americans. They've got basically a third of like 1 out of 3 every Americans, but it's actually better than that because you know that it's pretty much on a household level. Like, you know, 2 people in a household are never going to have it. So they might actually be pretty close to fully, you know, almost everybody has a Prime.
That's so true.
Now I'm wondering how many American households are there, because that's like a better way to look. Okay, 128 million American households, and they have 105 million Prime accounts. That's
That's crazy. Sorry to cut you off, but that is crazy. An average American household consists of 2.5 people as of 2019. That is ridiculous. That's crazy penetration. That's amazing.
Right. I mean, so there's 2 ways to look at that, right? They've got like pretty close to max penetration in America. That's great, but the flip side of that is they're going to have to keep looking for other growth opportunities, other countries, other services.
I mean, you know, Canada, we didn't have like I never got Amazon Prime till like 2 or 3 years ago, right? Well, 10 got it, but the reason for that was we never had like Prime shipping. It was never 2 days. It was always gonna be like a week or so, anyways. And I'm like, okay, it's not worth it for me. Um, and realistically, like we just started having like good deliveries where we can actually get something in the very next day. I know you guys have like same day shipping. We still don't have that yet.
Well, think about the infrastructure they have to put in place in the country in order to achieve that, right? I mean, like here in America, pretty much every major city has at least one warehouse now, if not two. So for them to go into a new country and achieve that same level where you can get, you know, 1 or 2 days shipping, they've got to have warehouses everywhere. It's you know, it's not an easy task.
Yeah, that's so true. Yeah, I have Amazon Prime for like the show side, like whatever they call it, Prime TV, but don't really watch it. I used to watch Top Gear all the time, but then once they changed the name, it just went down. Oh, and I watched that Star Wars series. What's it called? I forgot what it's called. It's actually
Mandalorian.
yeah. Tan loves the Baby Yoda.
Yeah.
To watch the Silicon Valley. Yeah.
He's like, I waited 30 minutes just to see that baby. And she's like, I'll watch it again just to see it again. I was like, alright. I wanted to get her one of those, she has a collection of those, what's it called? Those pop figurines. Still in the box. I don't know why she has a collection if she doesn't even use them. But I'm trying to find a Baby Yoda and I can't find it anywhere.
I think they made a Baby Yoda.
Funko Pops, right? That's what they call it?
Oh yeah, they have a ticker as well. Pop. Funko.
Wait, they do have it online. I should have just gone online. What? It's pre-order? That sucks.
Hey TJ, I don't think you were on when I mentioned it to the group, but a new show you could start watching is called Silicon Valley. It's pretty funny.
Oh, I watched that already. That's old.
Oh, you've seen it?
Well, I watched like the first couple seasons, I think.
Oh, nice. Yeah, it's pretty funny, huh?
It is.
Who's your favorite character?
I don't know.
I like Guilfoyle.
Is that the guy that leeches off of everyone else?
No, it's the guy that had the AI or the algo or whatever. I can't remember. It was like a machine that he named, gave it like a man's name. People made fun of him. He's like the older guy with like the long hair. I think he was like the CTO or something.
I always name my cars after males. It makes more sense. Low maintenance. Every car I had that I named, like gave it a girl's name, has always cost me so much more. Maybe cars are just getting better, but I don't know.
Hey Cypher, did you end up taking a trade on Roku yesterday?
What the hell? This is stupid. Delivery by May 2020? Who pre-orders this far ahead? I wouldn't even remember in May 2020 that I like bought. And that's crazy how many people uses Amazon Prime. That literally means every single person. Like, out of 10 households, 9 of them use. I'd be broke. If I had Amazon Prime when I was in college, I would be broke. I feel bad for millennials.
Until 2 to 3 weeks later, since you'd probably be drunk when you're ordering shit.
Like there was no point of online shopping here. I mean, you had to pay duty fees, and we had to go through UPS, which charges like $40 for no reason. You can buy like a $20 item, and it's still $40 in like duty fees for some.
Yeah, no, I was just joking around. It was that's a line from Doug Stanhope's stand-up show, Beer Hall Pitch. It's a little bit dark, like darker comedy. But like one of his skits is he likes shopping online, but he doesn't like it when he's drunk because he doesn't realize he's ordered something until like 2 to 3 weeks later on because the packages arrive.
That makes sense.
That's why I said like back when you're in like college and stuff, maybe you're drinking a lot or something. I didn't know you back then, so.
You know, that's a funny thing. I was actually never drank like actually yeah, like a 6-pack would have been done good.
Market's gonna open soon.
All right, guys, 1 minute. Guys, you see Roku here. You know, I'm still adding on to this position. I like Roku. At any price that I get down, you know, anything under my entry, it's always going to be a good buy for me. And, you know, I'm so glad I took some off at the 137 yesterday. Now I got to add some back, and hopefully this will continue moving up. But 137 is now going to be the level where if it doesn't crack and stay over, I'm going to just get out of it. Alright, I took a start on BA. I think it's a nice short. Hopefully it'll continue going down. I didn't take a large size only because, you know, I wanted that 324 entry. So let's see if it continues to go down. If it doesn't, I'll just, you know, get out of it. But obviously it's now going to tank and I don't have enough size in it.
Yeah, I just took that short at 320.01. I'll leave up to 322.
REGI.
All right, I'm out of it.
Roku 137 test. Again, I'm not expecting it to hold today, but you know, it's Roku.
DAR.
There we go, Roku coming down. Dollar a share from that short alert. And watch AMD here. It could bounce around this area. Keep an eye out for that one.
Yeah, this is my level yesterday, 4250. So alerted it at 4280. I didn't like it long. Just like short under 4280, and then it ripped down 60 cents.
Yeah, and I think SPY's got to hold this area here. If we can hold, I'd say 1960s. If we can hold that area, we should be able to retrace here. Let's see what the other tickers are doing. Apple's looking weak. And of course, Boeing's moving up when the market's moving down, so not a good sign. Hopefully if the market goes down, Boeing will go down with it, but if not, it might just continue to move up with the market.
Glad I took that loss for just
JBL.
$1.15 a share. That's up 340 for my entry.
MEIP.
It's at the level that I want to short it at, so I might add on to it. As long as it stays under 325, I'll add on.
Yesterday's close is 327 as well.
Alright, that should be good. Let's see if it goes down here.
Yeah, I just finished filling the gap.
GEVO. ZYNE. GRPN.
It's a nice push on SPY there. Beautiful, beautiful bullish move there. Look at that. Oh my god, that is strong.
Okay, let's check out PBIX. We'll have volatility here. Tesla just testing yesterday's close, 381.50 here. 382 test here.
Tesla's going to the moon, okay? What was all-time highs? I think Tesla will break all-time highs. I'm still long, but I think I might hedge it with some puts at this point, just to be safe.
This is all-time highs.
PSQ.
No.
383.45 maybe.
And let me check the monthly chart.
I thought we broke it yesterday.
389.
ACHV.
389.60s. Yeah, 389.60s.
All right, thanks.
2017. All right, that's our new target.
TGE. Rail.
Yeah, I see it now. $389.61, right?
SDS.
September 18th.
Yep.
Yep.
I think it was 2017.
Yeah, so
Okay.
it was literally 2 years and 3 months ago. September 17th, 2017. So will they do it today? We'll see. 9 quarters later, huh? 384, guys. TJ, that 382 level just ripped up $3.
Yep, I know. I'm telling you, Tesla is amazing. Well, not really, but what the CEO said is amazing. And I told you guys when on that earnings date where I said, okay, I flipped it. I was bearish on Tesla until that earnings came out. And judging by that new data, I told you guys, like, every single person that ran a model on this is just gonna update their numbers, and they're gonna be like, wow, this company's profitable now. That changes everything. The whole valuation model just took a 360.
Amazon,
180, my bad.
Amazon just cracked my 1780 key level. We're at 1786 here.
Amazon also got a price upgrade today. Not that it matters, it's Amazon, but always good, guys. I hope everyone's long on this, and I'm gonna do a lesson on this, guys. A little bit early today because I gotta go shopping again. Come on, Boeing. Just tank for me. Break VWAP and tank.
Wow, AMD. Look at AMD. Wow, it freaking ripped.
Man, SE is just struggling to break that 38. I was so happy this morning. I'm like, yes, we're breaking over. And then it gets sold into.
Yeah, I just took a short here on AMD. Target's 42.20, 30 cents. If we get under 42, then new target's 41.50.
You guys, you
Beautiful.
guys remember QRVO,
Yep.
which I told you on earnings to buy and just hold a small portion. This was when it was at like 98s. It's now at 114. Well, 115s technically. To this day, I still don't know what the company does. The earnings was just that good.
Roku melted $4 a share from the high. Well, almost 4. It's 350. Tesla's melted here as well. Back to 382 level. Wow, what a hard melt.
I know.
I think I want to try Tesla again today.
Come on, Boeing, just tank.
Look at AMD. Look at that AMD. That's amazing.
I'd say it's a long here. Guys, this is a beautiful support level. We're at POC right now.
Yeah, 42.35 is yesterday's close. So if this breaks over 42.35 here, I'll take a partial.
Easy, 10 cent stops, like 42.19 stop. Put a stop, easy.
Yeah, it just took a partial there at 42.36. Though the target was 30 cents, locking in 15 cents is still fine here based on my
JCAD.
acting support here. And we just had big selling pressure here and just selling pressure increase. So I think, and they just ate it on like no volume here. They're able to get a 42.51 fill, but they sold it right back down. So I think partial here is fine. And I could always add back what I took off at like 42.60 or even 42.80. Which was my acting resistance and my stop loss idea.
Come on, Boeing, tank. Just need 50 more cents. That's all I need.
Oh, you added to it?
Yeah.
Nice. Oh, wow, 326. Yeah, I'm really happy I stopped out of that one. With I had 50 shares, so I just took a quick like $60 loss on the short, and it ripped up $5 a share for my entry. So I'm really happy I got out of that one. If I reduced position size, I probably would have left room up to 327, guys, and added. But the volatility there at market open was pretty strong, so I thought we were going to try and go for the break under 320.
Should I short BYND? Looks like it wants to break down a support. I kind of want to take a short here.
CLNE.
Not a lot of volume.
Yes, there we go. Almost break even on Boeing. But guys, you see EPD? EPD is moving up too. And guys, we gave you EPD like at the lows. 2650s.
AMD looks like it's about to tank here. It's struggling. Watch for a low of day here. $42.30 is also a key support. There's the low of daybreak. It just knifed. Wow, that's amazing.
Guys, look at
your
Roku. Told you guys, sell at once 37. Look at that now. I should have just shorted this on fucking comics. I have it open anyways. Oh well. And finally, I'm in the profits on Boeing again, so let's see if this can go down a bit more. Hoping we can get like 321.40s. But I'll take some size off if we don't.
Okay, AMD 42.20 here. On this breakdown, I think we go for the 42. And TJ's 42.19 stop loss idea is really good here. It's tested 42.28 twice now. This is the third test.
If you're not in it, don't buy it yet. Looks weak.
AMD?
Yeah.
Yeah, I'm thinking about watch this idea that you put. It's fine, 42.
Yeah, but you can buy the stops that's getting triggered here.
Yep.
I might do that actually. Come on, trigger some stops already. Thank you.
Look for a 42.05 as well. SPY is approaching low of day here.
Alright, I took a long on AMD, but this is just a scalp. I still have my original position. But let's see if this can move up.
Let's target 42, let's say 42.50.
REGI. Sets. ACH.
Wow, Roku 133.
Yes, and BA is coming down. Fuck, no. I was looking at Roku, my bad. Okay, BA's still coming down too. I'm still happy. But I'm like, oh wait, that doesn't make sense. I was on the Roku chart, newbie mistakes.
I kind of like BA.
Imagine if I just got out of BA thinking it was Roku chart.
What's your average on BA?
Not good. It's 123.13.
Oh, 323.13. It
Oh,
looks kind of
323, yeah.
It looks a little up, yeah.
Yeah, I know. That's a gap in price. That's horrible.
Yeah, gaps in the candlesticks pushing the Bollinger Band. Wow.
Now everything I posted on StockTwits gets posted over here. Beautiful. Thank you. Thank you, bot.
Tesla back over 382. I'm gonna try a Tesla long now. Reduce the position size, just 25 shares. I'll cut it under 380. I'll double down at
TK.
380s.
I took half off of AMD. Just gonna hold the other half.
SRRK.
Nice trade, TJ. SPY still going down. SMH,
Verb.
SMH looks good, still over 141. Tesla just knifed 380. Yeah, I just doubled down 380.39.
MBNKP.
Market.
Okay, I just took off part of my position here on Tesla, 25 shares. Average is just under 381 here, so 380.97.
LOGM.
Okay, I just took a starter short here on TVIX as well. Target's 51. I took the 51.60. Tesla holding 380, guys. That's a double 50 EMA test here. So again, I'm going to cut this on the break of 380. I'm not going to look to add any more. I have 50 shares left. Though it does look good. Like, I'm considering doing a 1-to-1 since my average is 380.97, but I'll see. Like, on this one, I'd rather be entering on the bid side if I do another ad. TJ, well done on the partial.
Kala. TME. ACHV. MGNX. Kin.
Alright, guys, I'm gonna be doing a live lesson in about 15 minutes. Usually we wait till like 11 o'clock or something, just so we can get some trades in. But I have to get going today, so, gonna be a bit earlier.
Where are you going shopping?
Tan wants to go to some place in, I don't know, so I forgot where it is. Somewhere in Scarborough. Hey, great job, buddy. 6% today? That's amazing. Well done. One more thing, guys. Right underneath trading chat, you'll see NSFW chat. That is to keep this chat clean. Because, personally, I don't care if people swear. This is emotional. Trading, it's trading. And, it's not a big deal. But, there are some people that are actually tuning in from their workplaces or, they can't even look at our stream because they're at work. And it's probably due to the fact that, they don't want us to be swearing and talking about stupid stuff. So, for that very reason, we have that NSFW chat,
JCAP.
which you guys can use. A nice, safe place. Going forward, do all your shit talking in that channel, please. Oh, and by the way, still, like, there's no nudity or any of that stuff either.
Yeah, like just try and still stick to the guidelines of the group, but like just feel free to use that one to post things that you think would be better left away from the trading chat. Because remember, we have a lot of users that don't use the group intraday, but they use the group and they go through the whole chat in after hours or on the weekends. And when it's clogged up with a lot of
IDXG.
randomness, then it takes away from the essence of the trading chat. So yeah, just feel free to use the NSFW thread for like use it like the general chat. Just it's NSFW. And
But even if it's trade, but if if you want to, I don't know,
We got-
express your emotions, I don't really care as long as it's not stupid stuff.
Oh yeah, here we go. 20 cents here on TVEX. Considering taking a partial here, but I like SPY holding this 319.60s.
And Boeing is just consolidating here.
There we go. We got volatility on SPY, guys. Okay, Fed's Kaplan says material change in outlook needed to change rate. That was posted about 15, 20 minutes ago. I don't see anything else other than the USA manufacturing numbers. I don't know if it was mentioned while I was AFK, but MOM for November 1st, or for November, 1.1% versus 0.7%. Estimated prior negative 0.7%. TVIX 30 cents here. Tesla up. Oh yeah, here we go. $2 from my average.
Yes, then Boeing's tanking. Tesla's moving up. Also, Boeing guys, the Bollinger Bands are really tight. So if we get a nice breakdown here, it'll be so nice. I'm hoping it continues there. If it doesn't, I'm just gonna take profits. But it looks like it wants to break down here. There we go.
USA JOLTS job openings for October 7th, 7.267 million versus 7.018 million estimated. Prior 7.032. That just came out right. So I had mentioned I don't want to take anything off of Tesla if it's over 382. We just literally destroyed the inflection point there. Touching top Bollinger Band, I'm looking for a 385 extent with this increase in volume. Volume's increased to about double here. So I won't take, so the next trade that I'm going to do on Tesla is going to be 25 shares off, either at 385 or the break back down under 382.
There we go, guys. Boeing. I'm gonna take some off.
I think you're okay here. You don't need to take anything off yet, TJ. I think you're still fine. I don't think they're even going to try and push this to 320, like your average. I think you're fine. It's healthy, man,
Top.
for the bearish move. Held the trend resistance, gapped on the candle, extended past the Bollinger Band, failed the support. RSI is approaching, looks like it's just below 40 here. And MACD's under 0. So I think you're fine here on the short, man. I don't think you need to take any, like maybe a small, like quarter or something.
I'm just trying to get some off here.
Take a look at your
AMD.
Yeah, take a look at your AMD as well. It's at 42.50.
Yeah, I know. I hope it continues here. But hopefully you guys got those trades. That was a beautiful one. And this is exactly what I mean about buying the stops. We know that 42.20 had so much, like anyone that was day trading it is gonna get out there. So buying the stops when those stops gets triggered, because some people have too tight of a stop. Those are just easy wins for us. And look at the risk to reward on that trade. Literally like 3 cents risk. That's a beautiful risk to reward trade. Those are the ones that you can go in with size. That's the ones that I love.
Yep. And so AMD was great, guys. We got the short from 42.50, and we got the long. So I didn't take the long, but I did take a partial cover at my target. So the first one was partial cover 500 shares, 42.36. Next one was partial cover 42.20, 250, and I still have 250 shares open, which I'm going to risk up to my resistance, 42.80. But since HOD is only 6 cents away from there, I'm just going to do it right above HOD.
John, I actually took partial here too, so I have a 25% left.
Yeah, this is a this is a beautiful place to take profits. Acting resistance and 30 cents from
I got filled on BA, by the way. Just wanted to let you guys know before.
You took the partial on BA?
Yeah. Just to mitigate risk, that's it. I just wanted to
ACHB.
be up so then I can at least hold the other portion without having to worry about a gap down. I mean, like a gap up, which it might still happen. So there's still a risk of that. So, guys, if you are planning to swing trade this, do it on the option side. What much easier, way more safer.
I'm taking half of my TVIX off here. I just took off 50 shares at 51.34, and it's because SPY just ripped up 20 cents here, and TVIX hasn't moved. They're just chilling here at 51.30, showing bullish sentiment. So I don't mind reducing some of the risk, as TJ said. And TJ actually had added to that trade, so it makes sense to reduce some of the position because he could just add it back. So why not take something off? So yeah, I like the partial cover there, TJ. But well,
now it's gonna tank, of course. That's just how it goes.
Oh yeah, we established that last time.
Yeah, see, look at that. See?
Yeah.
It's like, guys, every time I scale some out, it tanks even further or like goes up even further, right? But then I'm like, okay, this time I'm not gonna I'm not gonna scale out. And then I just end up with a losing bag hold.
DMS.
So that's why, you know what? Just to be safe, don't get greedy, take some off. Now it's gonna tank to the fucking end of the world, but you know.
Roku retrace. Oh my god. Look at the Roku retrace.
Remember Shopify when I had 2,000 shares and I sold 1,000 for like $4 profit and the rest went up like
ADMS.
$180 a share? That sucks. But it happens. And look, now it's tanking, just like I said it.
And guys, remember, we alerted Shopify long at 300, and it's at 400. It pretty much filled the whole gap. It just has a few dollars to go.
No. Shopify. I alerted this at $130, guys.
Oh yeah, KJ alerted it a long time ago. I'm just talking about the recent one at the end of October. We alerted it at 300 long over. Yeah, Shop is older play.
TRXC.
Guys, and I'm gonna cover that in this lesson today too. You know, we're gonna go over the long terms. We're gonna actually go over it just so you guys can see the power of long-term holds, and how good it's done to my portfolio. You know, it's one of the biggest factors that I always try and mention to everyone, is to, you know, try and buy and hold and just forget about it. Whatever the news that gets posted, just ignore it. Nvidia is a good example. That thing was like hovering around my entry, went down 5%, up 5%, down 5% again. You know, it was just doing the same consolidation, but you know, that position is now up 60% from the 142 that I bought it at. You know, and this is these are like the trades that I'm always telling everyone to hold on to because it's so important.
Yeah, I just took a short here on Roku, 136.37. I'm gonna leave room up to 138 on this one. I think this is a clear short, and we can keep trying to short this. Just basically for today. So we're about to break under 70, neutral.
And you know, guys, like so many people have been eyeing it, and here's a post. I'll just quickly show. And you guys can see, look at that. That's in February,
ONCY.
guys. You know, that's how long I've been holding on to this stock. And, you know, it's important.
Tub.
You know what's my biggest miss? I just like, look at this. Look at this. Here's a big miss. I'll show. I had Amazon at 15, and I sold it for peanuts.
Okay, I just took off 25 shares on Tesla, 381.78.
Nice rejection on Boeing. Looks like the continuation on the downside should be nice. AMD's back at VWAP, so keep an eye.
I'm watching it here. I have 4 trades open, so we'll see what happens. Taking partial on 3 of them. I'm just managing Roku here.
Turb.
So this is part of my strategy, guys. What you do, or what I do, is take a trade, lock in some partial if I can, and look for the new trade. Now with
AXAS.
TJ being on, it's a lot easier for me to manage more trades. When I'm on solo, I try and just stick to like
IDXG.
1 or 2 so I don't confuse people, and I don't want to put people at risk too. So typically I'll build 5 to 10 winners in the day and just let them play out. But if TJ is not here, I'll stick to like under 5, typically like 4 or 5. And typically they're watchlist levels, but the tickers I love to trade are AMD and Roku. Those are my 2 favorite ones. Well, at least this year they've been my favorite. And TVIX is back up there now that did the reverse split. Remember, we called the short at $70. So Tesla came down $1 from that second partial I took. Now it's below my average. Roku 137.30s.
Man, I can just scalp SE all day long. Like, I don't know why I'm even holding this. I can just buy it every time it goes under 1780s and then just sell it when it goes up. Like, I could have made some money on this trade instead of just holding.
Which ticker?
Oh, SE. It's my newest growth stock. This is like, for me, the next Roku.
You said 17. You mean 37.80?
Yeah, 3780.
All right.
No, 3780s as a
QTW.
buy, and then, you know, like scalp it to 38, 30. To make some profits. I could have done that. Like, it's really, you know, channeling around here, so could have done that a couple times. Or even just like under. Like, if you look at the daily chart, there's even a better channel.
Oh yeah, baby. TVIX 50 cents from the entry. Tesla had a very nice recovery here, pushing for 382. Remember, everyone long over 382, short under. Man, look at Roku. I think it's time to do an ad here. I'm gonna chill though. I'm waiting for that 138 extension.
ONCY.
Actually, I don't think I should wait on this one. I think I should just stop out over 138 because if we do the extension here, I think volume is going to bring more volume on the HOD break at 137.73. We'll get stops triggering and we can push this up to like 138.50. So I'm just going to do a little ad here, just a one-to-one, 137.22. AMD over 42.50 here. Oh, there we go, Roku 136.90s. What a knife. That's beautiful. That's absolutely beautiful. Already in profits on that. Just on this 1-to-1.
Alright guys, just a big update. I'm still going to be in Boeing. Yeah, AMD's looking really strong, so I'm just going to hold that other 25%, hoping that it'll continue on this rip. And, I'll reassess it when it gets to like the 4270 area. We're right now in an area where there isn't a lot of volume. It gapped up from this price, so it's really at a pivotal area over here. I think, 4270s is going to be my next scale out, and then hope that it rejects there so I can buy the dip again. As for Boeing, still looking good, bouncing off the bottom there. RSI came down pretty heavy, and now we're back at to RSI resistance on the 50 zone. So let's see if it cracks down underneath here, continues going down. I want to see this maintaining under VWAP. If not, I'm just going to get out of it, and then I'll redo it whenever Boeing, goes up higher. The higher the price on Boeing, the better it is for us. Analysts are coming out saying that, they're expecting 700 million to 1 billion a quarter, or sorry, monthly cash burn rate. So that's crazy. If we can get a better entry, it's actually, a better argument for us, right? We can actually hold on to it longer. So it's really important to get the best entry, especially for swing trading, and we'll go over that right now. Now, all of you guys know, most of the time, and how I made my money is just investing. Now, obviously, as most of you guys know, I started when it was good, when the market already crashed, and I didn't even know too much about the market to know how bad, how severe of an impact it actually made. Canada, we felt it, but not too much, And when you're like 18 years old, you don't feel anything of a recession, right? I mean, everything's just like a new world to you, right? So here's my long-term picks, guys. You already know, like, take a look at all those picks, okay? Now, obviously, majority of it is due to the market going up, of course, right? But if you actually discount the market's performance, right, and you can clearly see it there. I mean, SPY, 21%. So discount 21% off of all of those tickers, and you'll see a lot of winners there that outperformed the market. There are some that didn't, like SQ obviously didn't, which we don't hold anymore. What else? SH, like some of these tickers, if you actually take a look at it, I don't own all of them anymore. Most of them I got out of Amazon, which was sad. I don't know why I got out of Amazon. But yeah, pretty much this is how I kind of like do my trading. Now, when I day trade, when I swing trade, it's a different portfolio. The one thing I love about TOS is that you can group your trades. So my long-term trades that I have grouped under long-term, I literally don't even look at it. I minimize it and I kind of keep it there unless something severe happens. For example, J&J. I got out of J&J. I think it's on this list, is it? No, JP Morgan I got out like within a week just because I wanted Citigroup instead, and honestly Citigroup is still outperforming JP Morgan, so I made a good move on that one. So J&J isn't on this list, but that's one. Baba, I got out of Baba, didn't like it. What else? SQ, I don't think I own SQ anymore. Oh, Johnny, you can go ahead and post like a add everyone message about the last. Yeah, SQ, I don't have it either. What else? Len, I don't have Len. Oh, actually I do have Len. Still have a little bit on Len. And that's up, that's really good. I'm actually up, like, Len, 44% on that one. So that's... Now, oh, Facebook. Facebook was a huge miss for me, guys. I should have held on to Facebook, but I didn't. And look at that, it's up. It did twice the performance of the market did, right? So That's definitely a huge miss for me. And you guys know how much I regret not having Facebook, and I'm still waiting for that dip to buy it. You know what? This might be a good leaps trade, actually. I might actually consider doing a leap trade on it. So Roku, Bobby, I've had Roku since IPO. I've traded it like crazy, and I think Roku isn't a long-term ticker, and we're gonna cover that today. So, why are these stocks long-term? And not all of these stocks fall on the same category. ACLS was just a really good valuation buy. Let's see what else. Honda Motors. I just wanted something in the auto industry. Obviously, it underperformed the market. MGA, Magna is a pretty big company. Auto parts, really good profit margins. VSH, it actually did really good before I sold it. I think it went down. That's why it only shows 6% there. Now, SQ again. SQ was a momentum trade, more of a momentum play than anything else. And Momo, same thing, just running on that momentum. Now, what you'll see on most of these stocks, we have Apple, huge market cap. We have AMAT. I like AMAT just because it was just one that was underperforming the other stocks in its sector, and also it had a clean sheet. So I like that one. Intel, you'll notice again, big market cap. Nvidia, big market cap. Citigroup, I wanted a bank stock. Citi was the best one. They had the best leveraging, and debt to equity ratio was lower than the other major five. Now, Disney, obviously, you guys know the Disney play ahead of time. We were, ramping up for the release of Disney Plus. What else? Len was just a valuation buy for me. JP Morgan, I sold at the same time. Tell, again, valuation buy. VSH, valuation. Facebook, miss, but, that was a good one too. AVGO, really nice chart setup. SQ, momentum. AMC actually did good. I did make money on it. Then I got stopped out the other half. Google's always a buy, guys. You just want to hold on to stocks like that. They are ridiculously powerful. And it's a really, like, I love their ethics. It's not like Facebook that does some shady shit with your data. Google actually changes lives. The amount of tools that they've created for industries that are literally linked to saving lives, it's astronomical. Baba, you already know Baba. It's a big player. It's Amazon, Baba. Those are the two names that anyone in every country would know, right? As long as they have internet connection, they know those two companies. And then you got Momo, which was just a momentum play off the earnings that we got. So that just sums up pretty much the entire portfolio that I mentioned, right? Now, the other thing you'll notice is, except for BA, guys, I'm still bullish on BA. Okay, I still think it's a solid company with a lot of potential. Now, can I see? I want it lower, so if I can get it at a lower price, I'm probably going to. Especially because they have like defense contractors. Give me 1 second, guys. I'm just gonna turn this notifications. There we go. Now, that's long term. Okay, you'll notice one thing. What is it? Large market caps. The stocks that don't have severe volatility. That's the idea. What's the number one rule of trading and investing?
Limit your risk.
Capital preservation. Right? That's our biggest thing. We have to preserve capital. If you don't have money, you can't trade. Right? So, when you're tailoring a portfolio, what's the first thing you should do if you're concerned of managing your capital?
Limit volatility.
You diversify, but how do you diversify?
Ta.
Hedge risk is another one, but that's a little bit more complicated. But how do you diversify? That's what we want to get to the bottom of today. Small
OMC
size,
Mark.
yes, B money. But here's the thing. The smaller size you go, the more stocks you have, the less likely you're going to make profits over the market. At one point, as you can see on some of those tickers that I was holding, the market performed better than the stocks itself, right? So you have to have a discount rate, and you have to judge it by something, right? You have to base it on a benchmark.
MEIPHE.
Obviously, for me, I'm using the market. If I can't outperform the market with my stock selection, then I should just buy the market. That's just the number one rule. Now, back a couple weeks ago, we went over a chart which showed that most funds, most hedge funds, 60% of their volume is on the market derivatives, right? Why? Because the market itself is performing so good. They don't have to pick individual tickers if the market itself was doing good. And this is exactly why we always mention don't short SPY, right? Because the market was so strong. When everyone else was thinking it was going down, it was actually performing really good. Now I'm just going to interrupt this lesson for a second. AMD, I'm going to take a quick portion. Actually, I'm just going to cut my AMD trade. And then hopefully it doesn't just, break high a day.
And also, guys, just a quick interruption. Sorry to interrupt. I closed my Tesla.
Alright, so, one thing that you want to do is look for the larger market caps. Okay? Guys, you have free trading. I still don't have free trading. I would die for free trading. I would buy everything my heart desires, put a stop, and it's just free. Without commissions, it's so much easier. When I started, guys, it was a $50 round trip. That's not even including the taxes that I had to pay for day trading or anything, That's $50 round trip. I had to stay in that stock, bag hold it, just to make sure that I broke even on it, okay? And I've done that multiple times on Tesla. You guys know that, when I started, it was 10K. Soon, within like a year or two, it went to like 70K just because, I bought it when the market was down, Apple was down. I had no diversification. It was just Apple. And that thing went up. And then obviously Tesla. And then when I started having like 70K, I'm like, okay, I can actually day trade with this. Now it makes sense. It justifies the $50 prices, right? With 70K, I could only buy Tesla because it was trading at around $67 or something around there. And at that point, even when I'm bag holding, I had to make sure that it went up just an additional $50 just so I can actually break even, right? Now, I'm not suggesting that this is the strategy for you to make money in the beginning. It was just good timing. And as everyone knows, timing is important. The only difference between a really good investor and a mediocre one is just timing, right? And timing the market is hard. Sometimes you get it right, sometimes you get it wrong. And that's just part of the game, right? Now, December, I knew I had a really good entry. We had a 20% drop on the market, which we haven't got in a while. So obviously, those kind of positions you have to hold on for dear life, which is also why I regret not holding on to Facebook. I got stopped out way too early, and then it ripped the very next day, and that was just an absence on my end because I didn't pay attention to it after I got stopped out. So another thing that I wanted to bring up, stopping out. Always stop out. I don't just mean buy and just blindly hold for dear life. I mean stop out if you think it's gonna be bad. Take your profits, or take your profits while it's going up. It's really important to take some profits because you're adding that cushion. Far too many people try to invest everything. Like if they just won a lottery, I don't know, they won like $30,000 from some scratch ticket, I don't know. You know what's the first thing they would do? They would put every single penny they have. They'll pick like 10 stocks because they think they're diversifying, and they'll put every single penny of that 30,000 into stocks. And I'm like, no, that's not how we do it. You start with 10% and you slowly add on to the positions. When you see a fire sale, you buy those positions. I have a watch list of like over 100 stocks. I don't own all those 100 stocks, but I am bullish on all those 100 stocks. That doesn't mean I'm just gonna buy it, right? Like, that's not how you do it. You slowly scale into certain positions. Sometimes you get a really good entry, and you guys know one of my trading demons, right? Is the fact that I don't like to add on to positions if I think my entry is going to be
IDXG.
at a point where I might get stopped out. In 60% of cases, that is not good, right? Because I'm not actually capitalizing as much as I
NK.
could be on those trades, right? On something like BA today, when I added onto it, that was a good save. Scaling in saved me, and then scaling out also saved me. Now I can add that size back, and now I have a better average, right? But in certain positions, like AMD for example, if I added onto AMD, I would have actually made more on it, but instead I just held the one size that I got, which was 1,000 shares, right? So it's always important to kind of evaluate which strategy to use. You're not always gonna get it right, and it's not necessary to get every single trade right. See, I did really good on selling AMD over there, but that's just for now. 5 minutes later, this could be up at $43, right? So it's important to keep track of those tickers too. Now, going into the psychology, guys, when I trade something like Roku, when I trade anything that I'm bullish on, that I like,
TME.
I have emotional value in a stock like that. For me to go short on Roku is the hardest thing. This is a stock that's made me the most money in my entire trading career. That emotional attachment is going to play a hand, and I know that for a fact. So any decision I make on something like Roku, it's gonna be biased. There's no two ways around it, right? It's always gonna be biased for me. TVIX, another thing. Would I ever like to go long on TVIX? No. If I wanted to go long, I'll just buy VIX. It just makes more sense. VIX contracts, cheaper, easier, more stable. And you're VIX always stays around the same level versus TVIX, which just melts, right? If I wanted to short, obviously I'm gonna be more biased on that short side, right? You gotta just know when you have this biasness, and you just have to take a step back and just decide: is this the biasness of me talking? Am I just talking because everybody in this chat room is talking about that
XXII.
stock? Is it leaning towards my decision, or is this a decision that I'm making alone, knowing that this is good? And you know what? The guys in our group agree with us, right? You have to put your own analysis ahead of everything else. We have a big group. We have a lot of stocks that we follow. We try and keep it that way. We're not trying to focus on one or two stocks every day, because we don't want that herd mentality. We don't want followers here. You guys can make your own decisions. We share our trades not so you guys can blindly follow them. It's just so you guys can see what we're doing, and we're hoping that you guys can take that to your advantage and be like, hey, this is what Johnny's saying. TJ, he bought AMD right when it broke support. Why would he do that? And then you use that into your strategy. You apply it, incorporate it, and actually excel at it. You can really learn from the traders here. And I gotta say, the traders in our group, I have learned substantial amount of data from the guys in our group. I wish I can give a shout out to everyone, but there's just so much people that have actually played a part in my trading development, and it's the same for you guys. And I know, if I can do it, if I can go from making 1,000 to 3,000 to even more, now on a daily basis, anyone can.
MEIP.
And yes, I have some knowledge on the fundamental side. I have some experience. That I'm bringing in here, right? So it's not like you guys can't just be like, oh, he just because he went to this fancy school, or just because he had a fancy job. I'm actually giving you guys the insights that actually matter. Literally, I'm cutting down the bullshit of 100 hours of bullshit, and giving you the
AXAS,
1 to 2
PRPO.
hours that actually matter from the roles that I took part in, right? Those are things that you guys can incorporate into your trading every day, and these are things that we keep bringing up, like buying stops. Is that a new strategy for us, guys? We've been talking about buying stops forever. That's one of my favorite entries. Selling into big moves, those kind of stuff. Those are stuff that are important, Now we're gonna get into psychology. This is something that Frank went over, and I'm not gonna try and overplay him or underplay him or whatever. This is into a topic I think he already touched on pretty much all the topics that everyone should be looking at, but I just found a bunch of DMs, and I wanted to actually mention this. Now, I posted this in the New Traders program on Friday night because I felt like this is something that's important that everyone needs to refresher on, and I think it's really important that every one of you guys, focus on it. And it's posted in the New Traders program channel. Now, the key takeaways. This is Mark Douglas, obviously. The biggest factor of successful traders versus losing traders is psychology, and we talk about this a lot because it's the only thing that really matters. Guys, we're giving you which direction it should go. We're telling you from our years of experience where a stock should go, what it should be valued at. We're literally telling you even strategies. The one thing that we cannot control is your emotions going into it. So when someone asks me, hey, do you think this stock is a good buy? Yeah, maybe it is. And maybe for me, it's a good buy because I have 50 different stocks. If I buy this doesn't even affect 5% of my position. So for me, it might be a good buy. For you, where you're going all in into this stock, obviously it's not the right tool. You shouldn't be doing this. You shouldn't just be taking one individual trade, right? Sample size. It's really important to have a really diverse and big sample size. Okay, I respect people that want to try out different strategies, but it's truly counterproductive if you just hop from one strategy to another without actually learning the nuances involved in that one strategy and actually being able to apply it consistently. Applying it consistently, that's something that I want to see all of you guys doing. Now, this is something that's not going to come easy, and it's going to be something that you have to bring up every single time. Now, I taught the Dream Team this, and I think a lot of the Dream Team members, you guys can chime in if you're on, will remember this, but every morning, make a list, make a rules. Every one of the Dream Team members, they have their own set of rules, and the one thing that I ask from them is every morning, read it out loud. Believe me, I went to a trading coach, well, more of a shrink, and they usually deal with athletes, right? But one of the things that they mentioned that actually stuck to me was just reading it out loud. It made a huge difference in me actually being able to execute those rules during the day. So every one of you, if you guys don't believe in it, just try it, and don't try it for a week. Okay, try it for fucking 6 months and tell me that it doesn't make a difference. I would be astonished if 95% of you 5% of people say that it didn't work. Most of the time it does. Now, going into it a bit more detailed, another thing that I found is, keep your rules simple. Don't overcomplicate shit. If you when you're picking a stock, it's simple. You have a reason this stock is moving up. You have some volume that's gonna be higher than usual, right? If you're in day trading, if you're investing, it's the opposite, right? You want volume to be a bit lower. You want you want less attention on the stock, right? But you want it to be fundamentally strong. Now, once you find the stock, you're like, okay, which position am I going to take? When do I think it's bullish? When do I think it's bearish? Guys, AMD this morning, I was like, okay, over 42. But obviously, judging by how the trade planned, worked out, we took the entry at the 42.19s, right? So 42 was the area where I thought it was bullish above. But you have to reassess your strategy and okay, you know what? We're just going to buy this stop out. It's a nice area here. Then, reassess from there. Now, what's the next thing? Oh, yeah. Johnny posted some golden rules. That's really important. Now, guys, never follow anyone blindly. I am telling you, even me, I am do not just follow any trades blindly. This is your money. Okay, it's different. If you're trading someone else's money, fuck, that's what, most of Wall Street just follows each other around, okay? If you look at most of the analysts, if you look at all of them, 80% of analysts are on the one side, while the other 20% are just trying to be the gun runners, right? Now, gunslingers, sorry. Now, if you notice, that's a common trend because it's not their money. It's public's money. If they stay on the winning side and just bet on the same horses, obviously they're gonna win. They don't need to win substantially. They just need to outperform the market marginally, right? So that's a different concept altogether. That's why like price target upgrades and downgrades. That's not something that I really follow heavily because of this factor. It's just joining a band, a paddy wagon. That's literally all it is. Until that ship sinks. That's literally all they do. Now, we went into, like, we did a previous lesson on, analysts and how their opinion and biasness affects everything and where they stand and what kind of firm they're working at. Determines which side of the trade that they're going to be on and how to use that into your trade. We already covered that topic, so I'm not going to go into that one. What I will be going into is the other psychological factors. It's just like you gotta be emotionally stable. Okay, like if the trades that I panic on, okay, those are the trades that I make my mistakes. The ones that I'm not prepared for.
FF.
So what's my number one rule of investing? What is my stop loss? What am I preparing for at least, the minimum? What is the percentage that I always look for as my, like, this is where I'm gonna cut my loss? Come on, guys, post it down there.
NRZ.
What percentage do I expect to lose on any of my long-term investments? There, I'll word it a bit different.
20% stop.
20%. 10% get the fuck out. 20% is my risk. Yes, Squirtle, I would love to keep it 3%, but the reality of the fact is, the fact of the matter is, that anything can happen and will happen. If I
IDXT.
position size for 5%, I'd have way too much size. When it goes down 10%, I'm gonna panic. But if I position size for 20% down, I'm not gonna panic. I'm actually gonna know, okay, this is fine. It's still a burning house, but it's okay. That's pretty much gonna be me. It's okay, guys. This is fine. And that happens, like Roku, for example. This shit always happens. No. So, total position invested. Yeah, no, not of total account. Total account, I mean, if you're only in 2 stocks, then yeah, total account. But total position, like if you position size, if your max loss is $1,000, okay? Let's do this actually real quick. Okay, let's do it with AMD. All right. So your max loss is $1,000. So someone tell me, how many shares can you buy of AMD at this price right now? Come on. 20%. I'm giving you 2 pieces of data. That should be. Come on, guys. I want to see more.
Gut.
Yeah, I like it rounded too. Lemonade. All right, there we go.
CRNT.
So this is what are we doing now in this trade? We're not going based on biasness or anything. We're going based on risk management, which is important.
PRPO.
So that happened to me on Facebook. You know, I had to stop. I forgot exactly where I actually stopped out on Facebook, but if you look at the daily chart, you'll probably see it. There's that one date that it actually tanked. This was back in June, where it tanked. Then the very next day, all it did was just rip up. So does it happen? Yeah, it does. You can't avoid those kind of stuff. Like it happened to me on Facebook, and I obviously still regret it because that would have been a nice entry. I stopped out, and then I could have got back in, and I didn't because I didn't have the follow through. That's not the fault of the trade. It was just a fault of me for not following through with that trade and keeping an eye on it even after I got stopped out. Even though I did all the research involved and knew where it should have, no, not knew, but no one actually knows where anything goes, but had a thesis on where it should be going based on fundamentals. I didn't stick to the trade, so then trying to buy it again didn't happen. I think I bought it at the 180s again, but then I got stopped out because my stop was too tight. But all that comes into psychology too. Like the next time I obviously took Facebook, my stops were a little bit tighter just because of that other loss that I took on it. Right, it wasn't really a loss, but huge opportunity cost. For those that remember, Facebook was a large position for me, so you know didn't. Now next thing. So okay, so me, Johnny, Frank, we trade stuff with volatility. And why do we trade volatility? Like someone tell me. Why do we love trading it? Yeah, volume is something we enjoy trading. It's better opportunities and we're good at it. We have some experience trading it now that we can easily get in and out of these. We can pretty much turn around a trade just because of our risk management. Now, does that mean all of you guys have to follow our strategies? Because it doesn't make sense for you guys to always follow our strategies. It doesn't. That's why I always bring this up. We are not here to try and make you guys follow our trades. We're trying to teach you guys how we trade so you guys can actually learn to the level that we're trading, right? Now, I really don't mind if you guys stick to like trades where it's lower volume, well, not lower volume, still high volume, but like lower volatility, right? Something with lower ATR. If you're starting off, there is no shame in trading something that's lower volatility, like AMD is still volatile, but it's 30 cents to 60 cents is something you can easily achieve on AMD. That's always been our target. You guys already know. AMD, it's easy. 30 cent stops, 60 cents targets. If you don't see 60 cents, don't touch it. And if your stops can be even tighter, it's a better trade, right? And look at AMD, by the way, guys. When we were doing this lesson, it was at 4270s, and then came back down to 4240s. So that was a really good, easy sell. And yeah, anyways, it just brings back to the point where trade something that's easier. You don't have to trade hard tickers. If the stock is moving like $7 ATR, why the hell would you try and just take one position in it? Why not scale into a position like that? It makes no sense to me why a lot of people go in heavy into a stock at one price and they're like, oh, I'm a swing trader, I'm going to swing this. And then they just buy their entire portfolio worth in one day. Don't do that. You have free trading. Buy one share at a time if you have to. And diversify. Buy other industries. Tech obviously is leading. Tech is something, oh my god, sorry for the spam there. Tech is something that I follow closely. I understand the general business line. And more importantly, it's always been, the one that outperforms the market. It's the easy win for me. But I still have Citigroup. I did have J&J. I did have Pfizer. Those are industries that I didn't like. I hate biotech. And, banks, they're just stable. That's about it. But you still want to diversify it, right? Even BA, BA doesn't really fall under my niche, but, I'll still own BA for that one reason, right? Apple shouldn't stop. Apple is actually reasonably priced. Guys, I told you this when back in the day when I bought it. Apple was trading at like 11 times multiples. That's ridiculous. Now it's trading
TRPO.
at like 25, I think. But still better than Netflix's 40. Um, so it's reasonably priced. Well, when you match it up with the other tech companies. But I wouldn't buy it here. Like 25 times, that's not a deal. All right, I think that's everything. What else should I cover? You guys have any questions so far? Oh, while you guys are posting questions, I'm actually gonna cover one more thing. Um, be brutally honest with yourself. If the market went up 23% in the last year, and your portfolio hasn't gone up 23%, you're doing something wrong. You're doing something fundamentally wrong. So my portfolio, I think right now it's at around 39%, but 41 is what I should be closing it at for the end of the year. And that's good. That's perfect for me. That is exactly where I wanted my portfolio to be. I was expecting 30, so to get
Tough.
40 it was really good. And that's partially because I made some money on the hedges and partially because of, a large chunk because of Roku. Now, if you guys are making 23%, and be brutally honest with yourselves, guys, just go back and see what you started with, your starting capital, and then look at minus the ads. Okay, don't include the ads, but just take a look and see if you've actually grown your portfolio by that amount of time. And if you have, then good. Stick to it. You're outperforming the fucking market. You're doing something right. Keep it. If you're not, then there is something fundamentally wrong and you really need to revise it, because if in a fucking bull market, if you can't make money, how are you going to make money in a stagnant market? In the easiest market possible, after a 20% dip on SPY, if you can't make money, there is absolutely something wrong. Like, I can guarantee it. And yeah, maybe it's the one-off trade that you're like, TJ, there's this one trade that got me, it went down 40%. Okay, good. That happens. That's fine. But how did you recover from it? How did you position size for it? It's not the stock's fault that it went down 40 fucking percent. That's not the fault of the stock. It's the fault that you probably didn't position size enough and you didn't expect it to happen, or you went in way too heavy onto a position, no diversification, that sort of thing. Like, really be brutally honest with yourself when you're looking into these kind of trades. And then also, even
OMCY.
on the day trading set, I see a lot of people trying to day trade that shouldn't day trade. Okay, I'm a nice guy. I don't want to just be like, hey, you shouldn't day trade. I'm like, guys, I had teachers that told me that, actually, they didn't, actually, yeah, there's only like 3 or 4 memorable teachers. Everyone else are just dicks. But, I don't want to be that person to you guys, right? So I'm not going to be like, hey, you're doing something fucking wrong. Change it. Like, I'll try and be a bit more nicer, but I'm like, yeah, I think you should do this. I wouldn't even like to mention that you're doing something wrong. Now, the dream team, that's a different case. I kind of want to help them out, so I'll tell them, like Dobie, and I'm like, hey, your entries are improving. His entries were horrible. Now it's actually really good, and that's something that I'll mention to him personally because he's on the dream team. So yeah, that's pretty much everything. Now let's take a look at the questions here. How many tickers have I kept from December to... I went over it in the beginning of the lesson. I went over all of those tickers that I've had, and some of them that I still keep. But a majority of them, I'd say like 70 to 80%. Most recent one,
OCSL.
SE. SE still working on it. Oh, nice. SE actually jumped in price. Beautiful. I thought it was going to go back down, but alright. As long as it stays over 38, I'm bullish on this. 39 break should be continuation for the next quarter at least. Selling it before earnings or hedging it. Haven't decided yet. We'll look at the option volume when it gets closer to the earnings time. Amazon. Amazon's easy. I've been talking to you guys about Amazon. I have calls, April calls, 1800 calls. Those are expensive. They're like, what is it, 7 or 10, 7 to 8K when I bought it. I don't know. It's probably even more now. So, but it's a lot cheaper than buying the stock, obviously. So, Amazon, obviously. Now, another thing about trading options, guys, I am not the best option trader. Like, for me, it's something I'll use as a hedge because it's a low risk alternative from me losing a lot of money. I'll use it to scalp. When I see late expiries, things with really good IV, that sort of thing. When we see a good opportunity, I'll trade it. Now, daily trading, like I don't know any good option trader that is so consistent. I know one guy. That's all. One guy out of everyone that I've met. I know one really good option trader. Every other option trader I know are mediocre and they do like market neutral strategies. The guys that I actually worked with, analysts that I know, they just buy options because it's cheaper than buying the stocks, and they can just they have a portfolio. They have an entire portfolio of just options. Like imagine my portfolio, but just options. For them it makes more sense, right? Because they're using their capital. For me, I don't want to really have to think so much about my trades, and it's another level. Like I do so much in my day. Building the houses, planning this, working on my AI, working with you guys, and then trading. So for me to if I was just to do option trading and like investing, yes, that makes sense. But yeah, way too much stuff going on. Okay, so calls. That's a good question. So I like to buy like twice as much as what I assume. Okay, like again, what's the number one rule? Capital preservation. So for me, I don't mind paying a higher price on the options because it's okay to pay higher prices on an option. It's actually better, to be honest. It's more safer. Buying more, you know, further out contracts, that's just protection for you. And always, like, people always look at options like, oh,
TIPT.
this is cheap. No, just look at it versus stocks and be like, hey, yeah, like my Amazon one is expensive. But if I was to buy all those Amazon shares, that would have been so expensive, right? And you have to remember the whole concept of options was made to be like a hedge and a way for people to like leverage their money. Using it as, trading, it still works, but again, I haven't met someone that was consistently profitable by just option trading. And if you guys have met one, like, let me know. I'd like to meet him too. All right, that's a good question actually. So you want to hear about careers for college kids? Okay, so what program?
AXAS. MRUS.
Oh, you're talking my language now. Easy, easy, easy. CFA. Just get it. I can get you a job, no problem, as long as you can pass all three. There is 100 people that I like, CFAs that I can like recommend you to. That's not an issue. You might have to relocate, but I also cover that in the professional trading careers. Um, the other thing, coding. Coding is something I'm still working on myself, which I should have learned before. But guys, I type at like 45 words a minute. For me, coding is just like, first I gotta do baby steps. Yeah, and like, I'm good at Excel,
IDXG.
but now people are fucking amazing at Excel. It's like shit. I really need to up the game on that aspect. But again, I was working at a big firm, so at those kind of firms, like we had software to do everything we needed. So, those skills weren't really utilized, right? I didn't actually need it, but there are some people that I'll hire if you're, really good at Excel. I could use that. And coding. Now, the biggest thing is to network, okay? Get into a really good firm, okay? And when I mean really good, I don't mean the fucking Morgan Stanleys, Merrill Lynch. You don't have to go for those. I see a lot of people try and aim to go to those first and then fail. Go for the second tier ones. Go for the funds that are outperforming the market that people actually don't know about, but only insiders would know about. Those are my biggest tips. Work at the firms that are doing really good, leveraging their money. You'll go far, believe me. Now, I always recommend CFA over everything else. It's the biggest tool in my arsenal that has helped me substantially. There is nothing like second to that, like obviously a quant. Anything to do with quants would be second, but the first to make money on your own, at least, a CFA is vital. CFA will take you further personally, even if you decide to quit your job. Quant, you're still going to be capped. Like you have to have capital. You have to have people working with you. Having that sort of an arrangement, you need a lot of money. Funding is going to be an issue for you. So unless you're like, one of the best salesmen in the world and cap raising is not a problem, then yeah, sure, go for that. But realistically, hands down, CFA every day. Second, like CMTs don't even make much, guys. CMTs probably make like 60,000 if they're lucky. Guys, you could work at like McDonald's probably as a manager and get more. I don't know. What else? Now, it's not just CFAs. You have to know how to analyze. Like pricing a stock is different. My first job out of college, that's good. That was literally the bank. I went into investment advisory, and that's when I actually started learning. Obviously, when I was selling products, that I knew all of the funds. And I knew every single fund had Apple, so I bought Apple instead of just investing in the fund, which was the best thing. The funds itself maybe did like 5-6% less after MER. So, that's the one thing. And investment advisory is good. The commissions are good. The contacts, that's one of the jobs where I got a lot of contacts and where people actually were like, "Hey, listen, you're doing too good. I think my first year in FA, I did $3.1 million of sales. And from that, the bank makes 4%. And from that, I make like point something, 0.00 something. But
NK.
that's how it works there. Unfortunately, it's not big bang for your buck at the bigger firms. The smaller firms, you probably are going to get a better bonus. So go for those first. That's where you're going to get the most bang for your buck, and where you can have personal development. What else? What other questions? Look, everything's gonna move to derivatives soon, okay? It's like all the funds have already started doing it, but remember, they're doing it at a huge scale. I wish I can explain more about it, but that's trade secrets. I like that. So trade war, again, I think it's stupid, and I think Trump sees it too. He's rolling back those tariffs is not a bad decision because you can't, it just boils down to U.S. consumers paying more money. No one's gonna like that. It trickles down to our economy. It doesn't make sense. Yes, I get it as a power play to outshine China, because China's going to take over anyways, guys. We already know it. It's going to be the if not already, they own pretty much all the debt anyways. Like they are actually a strong country versus America in the financial aspect, but more importantly, um, when you actually look at it as in a global scale, you don't want China to take over. You want US to be in the number one spot, and it's important for the country to be so. So for them to kind of like try and hurt China financially, that's not a bad idea. Obviously, it plays in really well strategically, but at the cost of our consumers, it doesn't make sense. And that's where I draw the line, where I say, listen, tariffs are not going to help. And guys, come on, like, recovering our industrial side, it makes no sense. Nobody wants those jobs. Do we not watch Dirty Jobs? Half the people there make like 150K plus. Okay, nobody wants those jobs. Okay, we're a society that is like built on leisure and a better standard of like a quality of life. We're not going to be the guys that wants to go sewer diving, right? I'm not saying China does, but I'm just saying that they're better for industrial jobs. They are working harder. They are doing it at a lower cost, and it's unfair for them because they're not getting paid enough. But it just makes no sense for us to do it because our guys want more for those jobs. Why would you pay? Why would anyone, like, if you owned a business, would it make sense for you to pay a guy $150,000 a year or pay like $20,000 for one in China? It makes no sense. You just do the opposite, right? It's just strategic. So what Trump is doing, I don't know. I don't like it. Industrials is something we used to use as a measure of how good our economy is doing, but I think it's outdated. I don't think we should be focusing on that as a metric at all anymore going forward, just because our take a look at the wage gaps between the two countries. It's huge. I know we went over this. I don't remember specific numbers, but we did go over it, and it's almost like 200 times. I mean, sorry, 200% higher. Okay, so how do I decide if it's how do I decide if it's still a good play if you're already in? Honestly, that's a hard one. That really depends on how good the fundamentals are and how good the valuation is. We use valuation, on a relative scale by looking at the other, competitors, right? And seeing where they're pricing it. So, when you're looking at it that way, and then when you look at the market and you're bullish on the market, realistically, you just gotta find stocks that have a positive EPS and just have a consistent earnings beat. They don't have to be stupidly big. I hate those companies like JBL. They have the highest what's the ticker? JBL. So they came out with the highest. No, so their best quarter ever, right? But when you really, and the stock's not bad at all, to be honest. It's actually really good. Like, it's a huge jump. But these huge jumps, can it be sustainable for you to be investing in it? That's the one question that you always have to ask yourself. This is probably going to be a play that you play, earnings run up onto next earnings, and then you just sell it, right? Which is still not a bad play, but, that wouldn't be something that I want to invest my money into. So Josh, look at a technical scale, right? Day trading, technicals actually matter. So on a technical time frame, you want to see where people are getting stopped out, and you want to kind of buy where people are getting stopped. What advice do you give to relatives and friends who ask you for investment advice? Oh, easy. Buy Amazon. And I tell them the same line, okay? In 5 years, you'll make your money. That's it. That's all. Last year was Apple. I was like, buy Apple. This year I'm saying Amazon because it's market's ripping and it didn't participate in the rally. So next time it does rip, it's probably gonna be with a nice lagging force behind it too. All right, that's almost an hour, guys. Any other good and guys, good questions by the way. I like these questions. How to use debt and tax to make money. So taxes, guys, there's tax avoidance. You have to really um again, I'm in Canada, so our tax laws are different. Our CRA is actually a lot nicer than your IRS. But even for me, guys, I get taxed a shit ton. I was at 41% last year, and it's probably going to be the same this year. US alone fucking keeps like 20% withholding. Which is, it's not double taxation because over here I just claimed that I had to do it on the U.S. side, so then they don't charge me that 20%. But still, I don't even live in the country, so they withhold that 20. Then there's also U.S. dividends, which I hate, which is why I buy like any stock that I want to buy. I kind of want the dividends on the Canadian side. Yeah, Ocean Grove. Last year I did a lot of day trading, right? Not a lot of investing. This year it should be a little bit better. But last year was primarily just day trading. So because of that fact, my you know tax rate is high. This year should be better. Okay, so this is a big topic, option player. You gotta wonder, why do people like democracy? Why does governments? Why does U.S.? Why is it so hell bent on changing every dictatorship into a democracy? Someone answer that question for me. Why do you think? The underlying issue, the root cause. Trillium, do I make more day trading or swing trading? More swing trading because I have more size into swing trades. Day trading is like 10% of my position, so obviously I'm not going to make as much as the larger sum of the account, right? Make larger percentages on day trading, but it's smaller sizes relatively. So it's not just that. It's not the U.S. wants to be the leading country. It's like we already know that. We already know that U.S. wants to keep its power. Everyone does. Anyone with power wants to keep it. It's just common sense. Who doesn't? And we know everyone is gunning for that number one position, and everyone does, and that's just how the world works, right? Now, it's easier to control. Like U.S. has the OCD when it comes to control. So, one thing that they really want to do is control, you know, other countries, like be able to not control
CXDC.
them, but like manage them. To manage them, you have to be able to manipulate a situation or orchestrate something, right? That can't be done where it's a dictatorship. There's one person in charge, and if he doesn't want to take a bribe, he doesn't take it, right? But and yeah, I'm gonna call it bribes, because any political contribution is a bribe. There's no other benefits for anyone else except for the people that are taking the bribes. It's like, and the people giving the bribes, right? They're getting the bills passed because of all these campaign contributions, and and it's really democracy that has this kind of setup. You don't have that same setup with dictatorships. You can't fucking company will, like in China there are companies that'll pay a little portion to the government, like Baba does. That just because to build a relationship. Okay, that's just not bribery. It's more of like an offering, right? But it's within the country. I don't see the same. I don't see Apple going to China and just like giving them their offer. Now it's different with U.S. corporations. They're multinational. They're everywhere in the world. And when you look at those companies, there's a lot of money that gets siphoned into politics and into companies, into parties that will be in their favor for whatever plan that they have, right? Now in Canada, we see it. In Canada, I'll use Canada as an example because I know it a lot more. But with the oil companies, we know Trudeau's funded by the oil. oil sands and all that, and it makes sense for him. You know, he's like, they found a new way of justifying it, even though he says he's all about the environment. He's also all about oil and gas. You can't be both. But he found out, he kind of convinced the oil and gas companies to give some of those profits to like help the environment and help the people that they're directly affecting. And then statistics came out saying that, okay, this is actually helping the society. So then you kind of use that as a bargaining chip, and you know, it just comes into a political play more than anything else. But again, it just, oh yeah, House of Cards, it'll tell you the same thing, same shit, nothing new. We just don't call it bribery here. In third world countries, it's a bribe. Hey guys, any other questions? That was a nice topic. I'm sure some of the Republicans in our group just left. Yeah, I think we covered everything. I mean, there's nothing else to really cover. It's pretty straightforward. Be brutally honest. Look for stocks with, you know, positive EPS, and go from there. I mean, we have a good team here. It's, guys, just look at multiples. Just make a table, learn Excel, and just literally put everything you find on there and just keep it. You don't know when this information is going to be relevant, but it's always good to be able to refer back to it. Oh, threats of breaking up large tech companies. That's a good topic. So there is one clause that they will keep fighting till their dying breath, and this is why Standard Oil, you know, those kind of oil companies got broken up versus tech companies. The
10,
number one rule is, okay, wait. It's like it has to be beneficial for the consumer. As long as the consumer is actually benefiting from them being a bigger company, they are allowed to be a bigger company. Okay, that's just like the most like simplest way to say it. But it's literally written there, and that's how most of these companies like Microsoft and Facebook, Google, they'll all, even Amazon will get away with it because they're actually doing something good for the consumers. Yeah, the antitrust law, right? So as long as you have that trust, you're good. And that's why these guys spend so much, like Amazon. I don't care if I buy like a fucking $5,000 thing from Amazon, get it shipped to my house, and I'm like, it wasn't there, someone took it, and it's technically me who took it. They'd still replace it 100% just to keep that like trust. Okay, I don't know if it'll happen with the $5,000 thing, but you know, they'll just do that because they want to keep that public trust. You know, Walmart does the same thing. You can pretty much just use and abuse anything and return it back to Walmart, and they'll at least give you store credit.
Hey, TJ,
Yeah, what's up?
check your PM. Thank you.
No problem. All right. Trading's always gonna exist, guys. We already went through this. 50% of the market participants are actually the public. So as long as the public is there, we'll still be. Now, 50% of the funds, 60% of them are just market. They're market derivatives. So, that's what they're going to be trading. Algorithms, again, there's so many different roles algos play. One is liquidity. The other is literally providing, like, not liquidity, but like providing imbalance, like providing for the imbalances on like extreme moves, where they have positions in the company, they see a huge swing, they'll start taking some size off within reason, that sort of thing. And then there's the trading algos, of course. Those are a bit more complex, and there's so many different strategies. So, Josh, the thing is, antitrust. Like, that's the thing about oil companies. They did that, and that's why they got beat up for it. But if you actually take a look at companies like Amazon, they're just disruptors. He will undercut his own pricing just because he has so much cash to take out competition, and that's okay. That's just predatory. What is it? Predatory invest? I don't know what it's called. Something predatory. Predatorial pricing, I think that's what it's called.
Hey TJ, thanks for the lesson. I missed probably the past 20 minutes of it. I was on the phone for a while.
Next unicorn. So AI space. Here's the thing. More money is going into VCs because VCs are realizing that without the market scrutiny, a company can grow better, faster. And that's why you see more companies nowadays taking longer to go public than others, because VCs are backing them strong. It's amazing. If you take a look at the biggest, hottest IPOs this year, you'll notice VC backing was already there. Their first two rounds of funding was like well funded. They had enough, more than enough. Minus the whole debacle with SoftBank and what's that company name again? WeWorks. Without including that whole stupidness, the VCs have done a really good job. They've done a substantial job. They've outperformed the market like 10 times. That's crazy when you really look at how good they done. And for that very reason, you don't have to really have an AI into, like, yeah, there's AIs, like Google has AIs, Microsoft has AIs, everyone pretty much in the tech industry has AIs, but when you look at the ones involved in trading, you don't need public money for that. They have enough funding for that. The next unicorn, look for high growth, clean balance sheet. Those are things that are like a proven formula. Good management, and again, Lemonize. Those are things you need a CFA to really go down into the details and really analyze it and know how to price. Like, pricing is something that it's not just a CFA. You have to have market insight. You have to know and be aligned with the market. And that just comes with experience. So that's why I'm saying, don't waste your time just looking at charts. Waste your time doing something that'll actually help you 10 years down the road. I wouldn't be here today if I didn't spend the stupid amount of time. And Johnny can attest to this. He was working with me. All I did when I was working, Johnny, tell them, what was I doing while I was working? Fucking waking.
Reading.
ONCY.
That's it. While I'm at work, wherever I get a chance, all I do is read. Shit that didn't even matter to me back then, that I never even understood, but now it plays a part in my development and in my strategies. So it's really important to, like, not just focus on technicals can only take you so far, guys. Do you really want to be trading for the rest of your life? Do you really want to do that? Or do you want to, like, trade, make enough money, and then go into investing, and then have a better work-life balance?
Yep,
Have the
that's
optimum work-life balance.
Remember, guys, investing is where the big money's at. Day trading is where the fast money's at. So my goal is to do long-term investments over the next, let's say, 20, 30 years, and use day trading for the next couple of years to build up my wealth. And note that I've only been doing this I started this journey 3 years ago, and my growth's been pretty good, right? In terms of technicals, since I already have the FA foundation.
Yep. Oh, I'm so sorry. I have some DMs that I didn't get to. Yanni, you said, how do I get to your lessons? Ooh, it's recorded on YouTube, but Johnny's gonna also post like a direct link for that. Secondly, actually, yeah, YouTube stream. You can go back and review it. But we're on the trading chat. So if you take a look at the United Traders chat room, it's under U.S. equities trading chat. That's where we kind of posted all our stuff. And alright, guys, this was only supposed to be an hour long, so I'm going to get going. Got a bit more shopping. Oh, by the way, BA short under 33.30. I mean, 3.30. Sorry.
Yep. I ended up closing that short that I took on BA. Got some profits on it though, which is good.
Well, it's the same thing. BA is actually a strong company. Okay, like it actually is. Like there's no two ways around it. Defense contracts alone will keep this stock up. It's just like we want to try and capitalize on it going down as far as we can, because I think there's still going to be like an effect for the next couple of months, and that cash burn rate, I mean, they still haven't rebutted that amount. They could have easily came out and be like, hey guys, no, sorry, it's not going to be a $1 billion a month. It's actually going to be like 500 million. Then we have some data that we can use to our advantage. Until then, just use this to your skill, to your advantage, and just any higher price that you get, it's a good price to just short it at. And guys, we talk about 1 billion a month as a big thing. It's Boeing, for God's sake. This company, how much do they make? I mean, look at price to sales. Their price to sales is 2.2. That's crazy. Yeah, and they're much more than planes, guys. You have to remember, they're one plane that they just discontinued. That has nothing. That's like marginal difference. The burn rate is what I was looking at. They have $132 billion in assets. They have $25 billion in debt. This isn't a company that is just gonna just fall off the face of the earth. And it's not just, like Tesla. Oh yeah, if Tesla came out, they're like, oh, we're canceling our Model Y or something. I don't know. That would be Boeing's really tied with the government when they're one plant that has I think it's like 100,000 plus employees that um, specifically builds the 737. They're not even laying them off because they're just gonna they can't. If they lay them off, it's gonna look bad in the public's eye, which is not good for them when it comes time to defense contract deals, right? So they're playing it smart. And I mean, you know what? When you're sometimes just write off your losses, sometimes it's better to just like Tesla did it. They wrote off $3 billion in a quarter. Why can't Boeing do it? Boeing's a way better company. If they'd write off $3 billion a quarter, nobody would even blink an eye to.
NAV. NK. XXII. SPRT. DAR. ACHV. NK. IDXG. NK. COS. Fang. XXII. IDXG. Goss. CLLS. PESI. NK. XOG. Tub. NK. ACST. Ta. CFRX. VTSI. DCP. PSTI. SBFGP BTAI. SJT. NAOV. ONCY. ACHV. SRRK. SBFGP. SVVC. IDXG. Ta. MODN. Miso. KRMD. SJT. SVVC. SBFGP. TIPT. CCBG. BBBY. JCAP. ONCY. TA. Gas. SBFGP. JCAP. Gas. VTNR. CVM. CVM. ONCY. Ta. BBBY. SBFGP. OCSL. Ta. CVM. TIPT. KRMD. DAR. ATAC. ONCY. NK. ATAC. MNLO. INPX. KRMD. Coda. ENTX. INPX. Fo. AXSD. MSM. INPX. IDXG. CRNC. XXII. INPX. NAV. East. INPX. NLTX. NK. HTGM. Miso. Seco. XXII. INPX. DAR. AZRX. INPX. CRNC. BTAI. IDXG. INPX. ONCY. TRST. INPX. NAKD. AXAS. NAKD. NK. MSM. GMAB. INPX. CRNC. INPX. IFRX. VBTX. MODN. PACB. HCU, HCCH, HCCHR, HCCHW.
you